Welcome back, traders and investors. We have Marlon Weems here of Hillcrest Strategy Partners. Marlon, how you doing today?
Doing well. Thanks for having me.
No, we're glad to have you on. Could you just give us a little bit of your education and work background in the markets?
Sure. Well, I am an Arkansas Razorback, born and raised in Arkansas. Went to school at the University of Arkansas, and actually started in the financial services industry a little over 30 years ago. Actually, on the fixed income side of the business, and spent the first half of my career there. I guess in late 2000, relocated to New York, joined a boutique broker-dealer in Manhattan. And I guess over the next 13 years, spent my time doing everything from running a couple of small broker-dealers to building and managing several equity trading desks. Focusing mostly on, exclusively on institutional accounts, but mostly working with pension funds, quant funds, asset managers. Program trading was a big part of our business, so we worked with a lot of quantitative trading desks and also did a lot of stock repurchases.
So I bet you have some good stories from working on those trading desks, huh?
Yes, and probably most of them are not suitable for early morning talk radio.
Okay. No, just talking about that. I mean, I've worked on a trading desk before, and especially when you have institutional order flow coming through. I mean, I guess managing risk is really an important thing. And did you help implement risk strategies for the desk?
Yes, I did. And just to be a little more specific about the type of trading that I did, I ran what was called an agency desk, which meant that we didn't take positions, really didn't overtly take risk. But at the end of the day, if you're trading on an active basis, which we were, you're going to be exposed to the markets and exposed to risk. So you really have to have a set of procedures in place to sort of anticipate potential risk, and then in the event that you have a negative event, have some procedures in place to be able to to have a plan of action to remedy the risk. So fortunately for me, I can only think of maybe a couple of instances where we were really exposed, and luckily for me, we came out of it okay. But yeah, there's certainly, especially in today's markets, when you think of things such as the flash crash and all of the mini flash crashes and fat finger trades that we've seen in the last several years, that's certainly something that is at the forefront, and something that traders should pay attention to.
Okay, and this is kind of like a broad question here, but you've been on agency desks, you've done trading, been on trading desks, you've helped, with risk strat. If can you pick out, and then, obviously doing your own trading, can you like point out for our customers here in the chat room, like what's the most common mistake that people make when they're trading? I mean, and whether a new trader, experienced traders, there's something that if you had to give one piece of advice to to people that are want to be active in the markets, what would that be?
You know, it's funny because I think um, there's some commonalities, and it doesn't really matter if you're on an institutional trading desk or sitting at home trading your own personal portfolio. I think there's some things that maybe it's just human nature that we tend to do that are somewhat lethal in a trading atmosphere. I think the first thing is overthinking, and that's it's a broad question. Of course, that's a broad answer, but I think sometimes as a trader you can really overthink yourself rather than coming up with a plan and sticking with it and implementing it and just moving forward. And I think on the other side of that, you really have to have a short memory when you have a situation where a trade doesn't go your way or you miss an opportunity. It's almost like if I'm sure some of the listeners are big football fans like myself, and you hear, you see a quarterback throw an interception, and you'll hear every time that, they say you got to have a short memory. You can't really let it stick with you. And I think the same, the same train of thought would apply to trading. And I think, finally, when you do have a trade that doesn't go your way, you just got to be really quick to cut your losses and move on. And I think if you do those things, and there's certainly, we could probably spend a good amount of time talking about this, but I think if you do those things, you certainly can save yourself a lot of angst as you trade the markets.
I can attest to that. I mean, analysis paralysis is something that people get into, and I think about some of it. Over the years of trading, some of the best trades that I've done has been things that I've thought about a level or a situation, for maybe days or weeks or ever months, and I had it in my plan. Like I knew exactly what I was going to do at the exact time, and then when it came to fruition, you do it. And I think that's excellent advice for new and experienced traders. You have expertise in algorithmic and electronic trading. Are you just a really smart quant guy that comes up with the algos, or do you help implement them into the markets?
Well, first, I'm not a quant. As they say, I play one on TV, but I'm not a quant. I am a guy who takes the tools that really, really smart people build and try to learn them as best I can and apply them to my trading strategies. And really, I was fortunate in the sense that I don't know, 10 or 12 years ago, I got exposed to some of the early algorithmic trading products that firms were starting to make available to the smaller boutique firms, which is where I was at the time. And this sort of goes back, and not to give a big history lesson, but this goes back to I guess it would be 2001, when we went from when decimalization was implemented into the marketplace, and that sort of spawned the move to electronic trading. And it was pretty clear to me that if you didn't get on board with that, the momentum, the train was just going to leave you behind. So I made a point to really do a lot of homework in terms of learning a lot of algorithmic strategies. And every firm nowadays has their own sort of secret sauce of suites of algorithms that are available. And over the years, I got to fortunately was able to use a lot of them, which was very helpful to my clients. And it was quite interesting.
Have you witnessed any fat finger trades?
Oh yeah. I've even had the pleasure of making one or two myself, but fortunately came out of it unscathed. But yeah, definitely. It's. I guess there always is going to be room for error. But one thing, in the argument for electronic trading, and this is not so much necessarily algorithmic trading, which is really, in my opinion, about scale and bandwidth, and and being able to implement strategies. The whole argument behind algorithmic trading was to reduce risk and reduce the potential for for errors. So, for example, a client calls you up and tells you, to buy, 1,000 shares of Walmart, and you happen to write down the wrong symbol, or you write down too many zeros. Well, there's certainly, an error that's going to happen there. And so the argument was, and I'm sure still is, an electronic trade that the client is sending you electronically. He's going to type in exactly what his order is, what the order type is, what the strategy is that he wants you to work with, and you're going to receive the information he sends. So, in theory, there's not really room for an error. But as we've seen, uh, I guess as humans, we just figure out different ways to mess up. So,
Right, right.
there you go.
Okay. Is there any for the any algos that you employed? If they, any brought in, news, machine-based news into the strategies to trigger, algos earnings releases? Have you worked with those at all?
I didn't at the time. And there's certainly some things out there, and not so much algorithmic, but the other thing that's sort of over the same time frame that's really come into play is social media. And my last couple of years of actively working on a sell side desk, we were using Twitter as much as anything to be able to keep up with news.
Hmm.
And a lot of times, ironically, and I'm sure everybody knows this, I mean, even today, I keep my Twitter feed going, and a lot of times I will see news from CNBC a good 10 minutes before I actually, on Twitter, a good 10 minutes before I actually see it on CNBC on television. So, there's certainly a component of that plays into trading these days. I've looked at some algorithms and some sort of add-ons that, people like Dow Jones were experimenting with. There were some other, I guess you could call them electronic, products that we could use. But, for me, it just really, I mean, I don't know, the cost benefit didn't really pan out. That's not to say that they aren't good products in the right situation, but I had so many different things on my trading desk, from a Bloomberg feed going to,
Right.
several other things. At a certain point, I guess you have to decide, are you trading or looking at news? So.
Yeah, that's true. That's true. Okay, HFT, high frequency trading's been in the news quite a bit. Michael Lewis with his
Yeah, a little bit.
with his bold statement, and a lot of different ways to approach it, its effects on the market. Could you just give us your take on HFT, pros, cons? Where's this all going?
Well, this is one of those things that, it's getting a lot of press because of the book, certainly. And I've had an opportunity to read the book. I liked it a lot. For me, it was, these are all things that happened many years ago. And so it's not really news in this, in the true sense of the word, for those of us that were sort of in the game and knew that it was around. I told somebody the other day, I think I could probably sell it either way, because I don't think that there is, if you ask me if the markets are, quote, rigged, I don't know that that's the case. I mean, I don't think there's a big conspiracy out there to cheat everybody out of, opportunity or whatever. But I think what's happened, and this, you could just as easily call this, story the tale of unintended consequences, because it really goes back to some regulatory implementations that happened probably 10 years ago. You're probably familiar with Reg NMS, and
Yep.
I think that's really what sort of changed the market structure, and even more importantly, just the infrastructure of the market, and created the opportunity for people to take advantage. Now, are they wrong for doing it? I mean, it's kind of like the guys, Ty Cobb wore spikes that were really sharp. I mean, guys are going to do whatever I think the system, they're going to take the opportunities that the system provides. Now, I could argue either side of whether it's right or wrong. I mean, personally, I think that the markets ought to be structured in such a way that no matter who you are, you've got an equal shot at getting to liquidity, at getting a trade executed. And, if I'm in line and I'm next, a guy should not be able to sort of cut line in front of me, to take advantage of my trade. Well, that's, again, in theory, that's the way it should be. It's not exactly the way that it is now. And so, my fear is that now it's become such a focal point, and you get politicians involved once again, and then there's going to be
Uh-oh.
regulation, and it may very well cure this problem and create another one that we have no idea what it is. And we can look up 5 years from now, and we'll be talking about some other issue that is created as a result of them trying to fix this, which was created by them trying to fix something else. So,
Right.
so it's really tough to say.
Unintended consequences a lot. Okay, just quickly,
Yeah,
let's touch on
yeah,
a couple.
absolutely. I mean, and just to carry out the point a little bit, I don't know that you can really blame, um, really, really smart guys for figuring out this inefficiency and taking advantage of it because, on one side of things, I mean, that's basically what arbitrage is. And I guess the question that's got to be addressed is this a fair arbitrage, if you want to call it that? Is it fair for them to be able to quickly get from one market center to another, and keep it a trade here, ping 10 different exchanges, and then, sort of, take advantage of it. So I don't know. I just think, certainly I think that the conversation is a good one to have, and hopefully they'll get it right this time.
Okay, just looking at a couple of the mergers that are going on. You got the Comcast merger going on, and you just what's the effect going to be on Netflix here? Netflix has just had a real monster rally after dipping under 320, almost to 300, coming back. Do you think that they're teaming up here to cut into Netflix market share, or do you think Netflix is going to survive on its own there?
I think the answer to both questions is yes. I think when I look at the Comcast Time Warner transaction, to me it looks a whole lot less like a cable company deal and a whole lot more like a sort of an internet grab, if you will, because at the end of the day, you look at it and if this merger gets approved, which I personally don't think it should. I think it creates essentially a monopoly situation, but there's a lot of pressure to make these deals happen. But really, I mean, Comcast comes out in the end basically controlling a third of the internet traffic. So, I can't imagine why that's, if you really want to think about it, I don't know that it's good for the consumer because I'm trying to figure out how at the end of the day my cable bill is going to go down. Which
Never.
cable, I mean, you look at cable, subscription rates. I think I saw the other day it was maybe it's outpacing inflation. Let's just say, and I can't recall exactly what the number is. I think it's 5% or 6%. Annually increases. And then we've already had, fortunately for me, I am a longtime Netflix subscriber, so my bill isn't going to go up for another couple of years, but I know it's going to go up. Even at $10 a month is probably still a pretty good deal. I think Netflix will just make the adjustment, and like any other company, they'll just pass the cost on to the consumer. But it's certainly a shot across the bow to Netflix and any of the other streaming services.
Okay. All right. Just finish up here. Can you tell us about your company, Hillcrest Strategies, and what you do, and why did you leave the Big Apple to start your own venture?
Well, it's funny. I had a lot of people ask me when I went there, why did I go there? And I spent 13 years working on the street. I was fortunate to get a lot of experience, meet a lot of good people, see a lot of things from all the different things that we've discussed in terms of the markets. Just being right there in the middle of all of it. At a certain point, after 30 years, I just started to reevaluate a little bit. And I'm from the South and wanted to, bring our family, back here, a little bit of a quality of life change. And, And also, I wanted to get involved in this, some areas, I guess, beyond the trading desk. And so, what Hillcrest Strategy does is allows me to still be involved in the game, so to speak, but just not sitting on the trading desk all day, every day, looking at a bunch of screens. So I work with a lot of trading desks, small and boutique broker dealers predominantly, trying to help them understand market structure. One of the big challenges to the smaller firms today with, Dodd-Frank and a lot of the regulation that's probably forthcoming that we've talked about as it relates to HFT and so forth. There's just a lot to understand, and if you're running a small desk of less than 10 people, in most cases, is what you're going to see on a boutique desk. I'm sort of that outsourced employee that helps them understand market structure, how to cost effectively run their desk, and then beyond that, I do I'm spending a good bit of time doing, I guess, what we could call strategic research that's focused on the capital markets, looking at everything from usage patterns on the buy and sell side, just in terms of the products that they use, and also just some of these same things that we've talked about this morning. Looking at the regulatory environment, looking at a variety of things to help them understand the landscape of what's out there, and try to structure their business models around it. So although I'm not having to get up at 4:30, 5 o'clock every morning, I'm staying pretty busy still.
Good for you. Okay, we've had Marlon Weems on, and he's the founder of Hillcrest Strategies, a value-based management consulting service for institutional clients, giving us a little bit of his history on Wall Street, HFT, algorithmic trading desk. You've covered it all. Marlon, thanks for coming on, and we hope to speak to you again soon.
Well, same here. You guys have a good day, Joel. Dennis, thanks for having me on.
How about them hogs?
Oh, yeah, Wu Pig Sui, right?
Yeah, okay. All right. Have a good day.